Sir, kindly explain when and what conditions we have to roll up or scale up our position. Simple. If there is something fundamentally changing in the markets, you roll up your position. Okay, basically what you do when your position goes into profit. Let us talk about that. So what you do if your position goes into profit? First is you use asymptote principle. What does this tell? It tells you to add to your existing position, all right, in a certain way, so that you can make more of your profitable position. This we do when we get certain inputs from the premiums. So what does that mean? Let's say you shorted your original short option at 50 rupees. If it drops to 25, you can add 50% of your original position. So you sold 100 shares here, you can add 50 here, and you can increase your position size. That is one. Second is rolling up. Now what does rolling up means is that this has to do with the strike price. So in our case, we shorted the 38,000 strike in our original position, but then the market went up nicely and it started crossing certain references that made me think that this looks like a higher time frame change in traders mentality, and I need to respond to that. Please understand, it's not in my time frame, it's in higher time frame. So if you are changing things in higher time frame, if the trend is getting confirmed or a breakout is getting confirmed in a higher time frame, that is when you have the permission to roll up your position. So what you do, this was the put that we shorted. So then what I did, I pushed it up 500 points. So either you add to your position same strike prices, or you completely move your position in profit. Now when you are rolling up, you are booking profits on your original position and you are establishing a new position. So these are the two things that you will do. Now how will you do that? So here you can see this was the last point of supply I was tracking, and then there was this small micro HUN combined with this it was sort of a double distribution trend day, so this was a higher distribution. So this was the topmost last point of supply, and these were the weak highs. When this was taken out, I had the permission to add to my existing position. So I could have added to my existing position half the number of lots. But then someone asked me a question when this last point of supply was taken out, like would you roll up? I said no, not yet. I will roll up if this goes. And you can see this was broken and we started accepting above that, and all those things were happening by the time we were closing. So I said we are closing near the highs. It's a strong trend day. We are at the top of the range. Obviously we are coming back again there, and we are taking out last points of supplies. So let us trust the market and roll up the position instead of adding, because rolling up obviously gives you more profit potential, and that is exactly what was happening. And I said instead of adding to the position, let us roll up, keep the quantity same but roll up. So I did that from here. I rolled it up to here, and then what happens, then if you ignore this opening, everything is going as per plan. Yeah, obviously one of the possibilities was that if we again get exhausted here, then what? So looks like we are seeing some exhaustion here, but what is the follow through? That is what we will track. So there is this VWAP, then there is this different references, that we are going to track. Like if it starts falling and if it starts taking out those references, we will think about adjusting our position, or maybe this will just end up moving sideways and do nothing for the day, and I will still make a good amount of profits. That is the process how you decide whether you want to add to the existing position or roll up, right? So I hope you get that.